Look at this $13 billion industry. On paper, it's a goldmine of aging populations and high-tech bandages. But beneath the surface, we found a hole in the pocket of the market leaders the size of a crater. Today, we're not just looking at annual reports. We're performing an autopsy on the policy ceiling that just shattered some of the biggest names in MedTech. Welcome to the 2026 Global AWC Strategic Analysis by HDIN Research. Buckle up, because the numbers don't lie, but they do tell a wild story. Here's the deal. Getting old is the world's most consistent business model. By 2060, nearly 2 billion people will be over 65. That's a lot of skin that doesn't heal like it used to. But here's the twist. The big money is no longer inside the hospital's white walls. It's moving to the patient's living room. If you're a giant like Convatec or Coloplast, and you aren't knocking on people's front doors, you're basically a taxi driver in the age of Uber. The setting has migrated, and the old school is getting left behind. Now, let's talk about the gavel of doom. Imagine you're selling a premium steak for $500, and suddenly the government says, actually, every steak is now $127. That's exactly what CMS just did to skin substitutes. One company, Convatec, woke up and realized $72 million of their value just, poof, evaporated. This isn't just a policy change, it's a margin massacre. If you thought MedTech was a safe haven, the policy ceiling just lowered the roof, and it's hitting the tall players first. Let's look at the scoreboard. Smith Nephew is the big battleship here, heavy, stable, but turning slowly. Then you have the sprinters like Organogenesis, growing at 17%. But remember, in the ocean, it's not just about how fast you swim, it's about how much oxygen you use. We're seeing a massive split between the scalers, who are just trying to keep the lights on, and the disruptors, who are burning cash like it's firewood to buy their way into the future. This chart looks like a very expensive donut, and most of it tastes like North America. Some of these companies are so tied to US reimbursements that if Uncle Sam catches a cold, they end up in the ICU. Meanwhile, in China, the VBP, or volume-based procurement, is basically a giant price shredder. If you're not making your products locally in places like Suzhou or Zhuhai, you're essentially bringing a knife to a laser gun fight. Let's talk about lean and mean. See that 15.9%? That's T&L, showing everyone how to run a business without wasting a dime on fancy offices. On the other end, we have companies spending nearly 75% of their revenue just on marketing. That's like spending $75 on a megaphone to sell a $100 cake. It works when you're growing, but when the market tightens, that megaphone becomes a very heavy weight around your neck. This is the profit mountain. Coloplast is sitting at the peak with 32% margins. How? Because they've integrated into the patient's life so deeply, they're practically part of the family. But look at the inventory turnover. One company is moving goods 5 times a year, while another is so slow their bandages might actually get dusty in the warehouse. In this game, if your inventory isn't moving, your money is dying. Warning. We found a red flag that's glowing in the dark. Organogenesis reported $37 million in profit. Great, right? Wrong. Their actual bank account dropped by $10 million. It's like telling your wife you got a huge bonus, but then admitting the boss paid you in IOUs that might never be cashed. When receivables spike 98% and sales only grow 17%, that's not growth. That's a accounting fairy tale waiting for a reality check. The tech is shifting from covering a wound to building a new human. We're talking about fish skin grafts that heal deep ulcers and sprays that turn a tiny piece of skin into a whole new layer. The companies winning here aren't selling bandages, they're selling time. If you can get a patient out of a hospital bed 5 days faster, you're not just a doctor, you're a CFO's best friend. Efficacy is the only real shield against price cuts. Who is actually building the future? Look at the burn rate. Avita is pouring nearly 30% of their revenue back into the lab. That's enough to buy every person in New York a Tesla. Well, maybe not quite, but it's a massive bet. The giants are only spending 4%. They're playing defense, trying to squeeze every penny out of old tech, while the disruptors are reinventing the wheel. The question is, will the wheel be ready before the disruptors run out of cash? AI is the new glue. Convatec is using apps to track patients for over a decade. That's not just data. That's a digital leash that keeps competitors out. In 2026, if your bandage doesn't have a sensor or an app attached to it, you're basically selling 19th century technology to a 21st century patient. Digital isn't a feature anymore. It's the moat that protects your margins. China is no longer the easy growth button. The VBP has turned the market into a gauntlet. S&N's revenue there took a hit like a heavyweight boxer in the 12th round. To survive, you have to go in China for China. If you aren't manufacturing in Suzhou or Zhuhai, you're just an expensive guest who's about to be asked to leave the party. Localization isn't a choice, it's survival. Every rose has its thorns, and this industry has some giant spikes. Coloplast is carrying so much goodwill on their books, it's 121% of their equity. If their latest acquisition doesn't perform, that goodwill turns into a bad debt nightmare. Meanwhile, others are paying 12% interest on loans. That's not a business loan, that's a credit card debt for a multi-million-dollar company. One wrong move, and the house of cards feels the wind. So what's next? 2026 is the year of the Great Reset. We're looking at new launches, automated factories, and the first full year of living with those brutal CMS price caps. The companies that survive will be the ones that replaced human labor with robots and replaced marketing fluff with hard clinical evidence. By the end of this year, we'll know who's a survivor and who was just lucky. The bottom line? The game has changed from how much can I charge to how fast can I heal. Convatec is our resilience king because they saw the storm coming and trimmed their sails. Coloplast is the growth alpha, but they're walking a tightrope of debt. In this new era, bandages are tech, data is the new currency, and the only way to stay on top is to prove you're worth every single cent the government allows you to keep. This was just the tip of the iceberg. If you want the full-page data model, the private advisory notes, or our deep dive into the 2026 fiscal projections, head over to HDINResearch.com. Or just drop us an email at sales@HDINResearch.com. Don't invest in the dark. Get the research that the big firms use. I'm from HDIN Research, and I'll see you in the next deep dive. Don't forget to like and subscribe if you want to keep your portfolio out of the ICU.